Hello. Yes, good afternoon, everybody. So today is 8th of April, May 2019, and I'm going to take you through the webinar for today, which is how to capture trending markets. So today's webinar is going to be a bit different from what we do normally. We are going to look at certain things which we normally don't look at. And the main reason I'm saying this is because it involves part of coding. Like you may not necessarily be knowing that at the moment, but then it involves some sort of coding. So I've already done the coding personally. I don't want to go deep into what that means or how it's done. Just know that I'll be explaining what I did after, how I came up with the results. So let me put my chart so we are able to see first. The first thing which I noticed, the main reason I'm doing this webinar is because people don't understand exactly how to trade. Like people understand, some would have a strategy very well. They know I'm supposed to buy when this happens, I'm supposed to sell when this happens, I'm supposed to do this and that. But the thing they don't know about is that even with the best strategy, you need to measure on certain things. Like don't make money narrow. Don't make small money and be satisfied with small money, while when you're losing, you allow yourself to lose big money. The secret to success is to ensure that when you have a trade that is winning, you hold to it. That's the secret. So look for trades that are on the longest time frame possible and those that are in a trending market. Don't look for trades that are current where the price consolidates. That's why you want to trade. No. Like somewhere like this. So I'm not going to use commodities or currencies. I'm going to measure most on these ones. Indices, not indices, CFDs. So the most important thing, what I've learned personally, is don't focus on cases when the price is consolidating. Like if you find a place where, or a zone where the price does not break above or does not break below, it's better to avoid such a case. Look for places that price is showing a clear direction. Like just look at this. We have this. We have there's a place here. We had this as a support. As you can see, price went up, it came back a support, it went up a support, it went up a support, and then on the upper side we also have something that is significant. There's also this one. So this is also consolidation. That it's moving downwards in some trend does not mean that it's not it's still consolidating. And then we have this from this point here up to this point. This is clear trend. This is a very, very clear direction. So your job as a trader is not to measure on places where the price is consolidating. If you can't find a clear direction, it's better to leave the entire thing. If you can't find a clear direction in any market, wherever you choose to trade, without the clear direction, don't trade it. Do not trade if there's no clear direction, and only trade trending markets. So what I mean by trending is where you understand the clear direction, where we are headed overall. Where are we heading? Upwards. Where are we heading? Downwards. So you focus on a trade based on the overall direction, not based on what's happening temporarily. So like in this case, just look at this. This is consolidation. From this point here, we also have this, some consolidation happening. I wouldn't trade anything like this. This consolidation, and then we have a clear trend up, and then there's a minor consolidation here. This is a clear trend, then retracement, it continues up. There's also this is a clear trend. So what the main aim of this webinar today is to find out how can you be able to enter these trades so that you don't find yourself entering while the trend is coming to an end. You don't want to find yourself in a case where you enter trade and then it begins to move against you immediately. You want a case where if you enter trade, it goes your direction immediately. That's I believe that's what everybody wants. But some people, they also know how to find trend. They'll know this is a trending market. We are currently heading downwards. But instead of selling immediately when the price is starting to move, they wait for price to go down up to maybe to confirm that we are continuing downwards up to somewhere around this point. Then price continues their way and then they're eliminated again at the same time. So we don't want to be this person. We want to be that person who sells here somewhere there, and then price goes down, comes back, he's not worried, he knows we are still downwards, it continues up, down, then like that until the end. That's when you exit. So this is one type of a trend. And something else which I've learned is that if you want to trade correctly, look for places where the overall trend is clear. Look for the place where it's obvious that we are possibly heading this direction. You don't have to fight for that. Places where if you enter today or you enter now, price is likely heading your direction. So those are the places you need to look for. Don't, if you don't understand whatever is happening on a chart, the chart is consolidating, leave it. Like we have this. So I want to show you numerous examples of consolidation so we are not confused. There's also this. We have this as a resistance, as a resistance, as a resistance. Then there's a support, there's a support, there's a support, there's a support. So one thing which you need to understand is that anytime you find a level like this, the one that is holding, the best case if you want to pick the beginning of a trend is to wait for price to ascend above it or to break below it. Then immediately on the first retracement, you look for a buy. So like in this case, we have the top one, the upper line. This is just a resistance here. We also have this as a resistance there. And then you also have this as a resistance there. And then price uses the lower one as a support there. We also have this as a very good support somehow, support. And then there's also this as a support there. And then you also have this as a support. So basically, the moment you know that now this is a very good level where price keeps holding itself above, don't find yourself buying it if you want to pick the beginning of a trend. The idea is to wait for price to break above that such a level or retrace back to the same place, and then you pick a buy immediately after the break above. So what will happen is this: the price is likely breaking above. You don't buy while the price is on top. While the price is here, don't do anything. You wait for price to retrace back up to the same trend line, and then you pick a buy from that point to the upper side. So another thing, when you see something like this happening, that there's a level that is being used, the price keeps coming back to the same place, but it's not breaking above it, there are some temptation that you may find yourself wanting to sell somewhere there, which is still correct, still a sell. This is still a sell, but the best time is to wait for price to break above. Rather than selling, wait for price to clearly ascend above that line. Then if it can retrace back immediately, then buy it from that point. Your stop loss, the correct place, should be below the lowest low, below this level, below this line. So what that simply means is if price can come back and close below within this zone, then possibly this was a false break. So what I mean by false break is price could not sustain itself above the level it just went above. So your work will be simple. Wait for price to come back up to this point, pick that trade, have your stop loss, and then if the candle where you have entered actually closes below, exit that trade. Exit that. It only means that we are no longer buying, that whatever you saw was actually a false break to the upper side. So like this is a very good case. Let's look at another example. We also have, this is also consolidation. This is a minor consolidation, and then there's also this, the entire place, this is consolidation. So something like this, somebody may ask me, how do you trade something like this? How do you know that this uptrend is ended? How you know that an uptrend is ended is when price begins to consolidate within a trend. So let me use some drawing. Just a second. Assuming you are looking at this chart like this, I'll remove the line graph. First of all, we will not use it like that, and then I'm also going to remove period separators. We are not using them. So this is your chart. Normally this is how the price moves. When the price is somewhere below, somewhere at this point, it will move up in an ideal market which does not exist. In simulation, we assume that the price is moving in a straight line, but in the actual sense, the price will move up like that, then retrace back slightly, and then continue back up, and then retrace back like this, and then it continues to the upper side. This is what we expect traditionally, that the price should move like this, retrace back slightly before it continues even higher. So this is true. This is how most prices move. This is how most indices, most prices, this is how they move. But there's something else which we are not taking into account, that these ones are not straight line. Price tends to consolidate in between. So whatever we were referring to as the retracement is actually consolidation. I'll mark them red so that we don't confuse them. Red. We also have this one, red. It's also red. And then you also have this as red. This one. So this is what we expect to happen, that the price should move up, retrace back slightly, continue up, back slightly, continue up, retrace back slightly, and then we expect that where the price is at the moment, it should retrace just slightly before it spikes even higher. This is what we expect. But assuming this does not happen, that instead of price continuing up, it does something like this. It consolidates, it begins to consolidate. We were in an active uptrend like that, then price begins to, you don't find any clear move, it begins to consolidate, it begins to consolidate. This could be a very, very good sign that we are possibly ending the previous uptrend. So if you notice something like this, that previously the price was actively upwards, we were heading up, everything is showing us upwards, then all of a sudden it begins to consolidate. What you do as a trader is simple. Don't focus on a buy, on a buy, on a buy. The best place to buy is when price breaks above the highest high after this consolidation. And the best place to sell is when price breaks below the lowest low after the consolidation. So you'll basically mark the entire place as a zone. You'll come here and then highlight this as an entire zone. You'll highlight the way I've done, and then you give it a different appearance. This is what we have. You'll give it appearance like that. We'll give it appearance first of all. We have the appearance already. We have this. So what this means is simple. The moment you notice that the price is beginning to consolidate instead of heading straight or continuing upwards, you know the current uptrend is coming to an end. So your job will be simple. You now wait for price to either clearly ascend above the highest high, and in this case, this is the place. This is the highest high, another high, another high, another high. A break above will mean we've just formed another higher high. So this is not a sign that you're supposed to buy just yet. It does not mean that you're supposed to buy when price makes a higher high. It does not mean you're supposed to buy. What it means is the price has gone above a significant zone, and therefore you should wait for price to retrace back to the same place. Then you pick a buy from that point like that, and then you have your stop loss below. So this is basically how you pick a long-term. This is one main way to pick a long-term trade. Wait for a clear trend. That's the first thing. Then after that clear thing, after you've seen that now we are upwards, wait for price to begin consolidating. And then if it can consolidate significantly, that is, if it can take time consolidating below that zone, then wait for it to break clearly beyond that level. Then while it is here, you still don't buy anything. You wait for price to retrace back to this level, you pick a buy from that point, expect that buy to push price even higher. So this will ensure that you enter the least risk possible, and your stop loss needs to be below the candle which triggered this break, or if you're you're risk averse, you can have your stop loss here below the lower zone below here. You can have your stop loss there. So I hope this makes some sense. I hope it should make some bit of sense. It should make for us some sense that we are not just buying anything. We are not just buying anything. We only buy when price breaks beyond a significant level, and only when there's a clear trend. So there's another thing here which I'll mention. So assuming instead of price heading upwards, the way I've mentioned, it does not go up. Instead, it breaks below the lower line. This is how you confirm that the trend has ended. There is no other better way to understand the end of a trend than to wait for consolidation, and then that consolidation to be broken to the opposite side. So when price is heading upwards, we are less focused on that buy. But after price breaks below a consolidation, like in this case, price consolidates, then it breaks below, that now confirms that we are possibly heading downwards. See, I don't like the idea of saying that a pin bar, it means that the market is reversing. A pin bar is just one candle. You have to know what the entire market is doing. So if somebody says that this is a resistance, there's a pin bar, that means this uptrend is ending. That's not genuine. The most genuine way is to wait for a retracement within that uptrend to be broken. What I mean by retracement is this. Like, look at it from this point. The price heads up, then it retraces. I'll mark that. Then it continues up, and then it retraces. I'll mark that as the end of a retracement. Then price also continues up like that. It comes back down. I'll also mark this as the end of a retracement. Then price continues up and then continues down, and then this is also an end of a retracement. So that instant when price now begins to break below end of retracements, that's a sign that the previous trend which was dominating is actually coming to an end. So it means you're supposed to be looking for a sell at the moment. So if you can pick this correctly, assuming you are able to see that this is the end of a trend, we had a support, then price has gone down, and then it has come back to the same place. You successfully sell it here. Assuming you successfully sell it there, then just know that possibly you are heading down up to this level, up to where the entire trend started. So this is one way. This is how you can pick very long-term moves. Look for a chart from the longest time frame possible. Ensure you understand what price is doing. Then wait for end of retracements to be broken. So end of retracements is this, that price moves up, then begins to retrace from this point, goes down up to this point, that's the end. Price continues up, begins to retrace at this point, ends somewhere here, then it continues up, begins to retrace at this point, then heads down, and then this is the end of the retracement. So anytime price now breaks below any of those end of retracements while we are going downwards, that's an opportunity for you to look for a sell. Like in this case, we have this one. When price retraces back to this level, I'll successfully pick a sell from that point. Price continues down. I'll also pick a sell from that point, like that, up to the last side. So you can basically see that I'm not just selling anywhere. You don't just sell anywhere. You only sell at levels where other people are selling. If you check the webinar I did previously on trend lines, you will be able to see what I'm saying. That you cannot sell here if somebody else was not buying at the same place. You don't want to be the first person to be selling at a level. You don't want to find yourself being the first person to sell at a level. That's not the best way. The best way is to look for levels where people have been buying, people have been selling, they've been doing opposite, they've been doing the same way as what you want to do. So in this case, I'll sit down and then wait for price to break below a retracement. Then after that break below a retracement, I wait for price to retrace back to the same place it just broke. Then I look for a sell. That's the best way. That is always the best way. Don't find yourself saying that the trend was upwards, we were heading upwards, everything is upwards. Then you see one single candle here as a pin bar, and then you find yourself selling just because there's a pin bar. This is not the reason. This is what most textbooks say, which is correct, but it's not the best way to tell the future, the end of a trend. This is not the best way. So don't find yourself, if you've seen that this is an uptrend and everything is heading upwards. The correct way to confirm that the trend is ending, that you're supposed to pick an opposite trade, is when price begins to consolidate and then it ends up breaking below those consolidates. That's the time to confirm. That's how you confirm that the trend is ending. So don't find yourself trading the idea of that there's one pin bar signals reversal, things like that. Just one single candle can reverse the market. It is true, but to confirm that the trend has ended, wait for consolidations within an active trend. Then if price can break that consolidation to the opposite direction of the previous dominating trend, then that's when you confirm that that trend has ended. You don't say the trend has ended just because a candle has shown up on the chart. So some cases it's true, it is true that just a pin bar can reverse the market, but the best place is when it begins to consolidate and then it breaks to the opposite direction. Like one case that certain thing happened is this gold. We have gold here, and I didn't expect this to happen, honestly, just that it did happen. So this is a trend. We have price moving from this point, continues up, then somehow you see a pin bar that indicates a sell. So what normally, if you are trading pin bars and you say that every time you see a pin bar within a trend, that means the end of a trend, this is true. It could mean that the trend is ending, but it does not confirm that the trend is ending. What confirms that the trend is ending is when price has gone below a retracement. Like we have this, I'll look at this first of all. Here's this, and then price goes down, then it continues up somehow, and then it goes down, and then it continues up. It comes back to the same retracement. So one thing before I continue, anytime you notice that the price keeps retracing back to the same level, it keeps moving up but comes back to the same level, just know that that is a very good place to trade from. Anytime price keeps retracing back to the same level, like in this case, you have price moving up, it comes down, it goes up, it comes down, it goes up. If price can come back to this level in the future, then that is possibly a very good place to buy from. Note that properly, that levels that price has been using consecutively, if price keeps retracing back to the same level, then that's always the best place to trade from. If price keeps pulling back to the same level and we are, you know, the trend, we are heading upwards, then that's always the correct place to trade from. Don't find yourself trading when there's no clear trend. That's rule number one. And don't find yourself trading when the retracement has not ended. So some people would say that, oh, if I know that the trend is upwards, like from this case up to this point, I know that the trend is upward, why don't I just buy it? Yes, it's good, you can still buy it and make money, but we want a place where we enter at the least risk possible, so that nothing stops you from making money. You don't want a case where you enter trades, it goes against you, you enter the next one, it goes against you, you enter a good one, it goes your way, you earn less compared to what you're losing. It's better you trade two good trades in a month, with big volume, and you're okay. So this is one thing most people get wrong, that somebody just thinks that as long as you have a strategy, you have everything. A good strategy must take into account the trend, the current dominating trend. So to help us understand some trend, there's an indicator which does that very well. I don't know whether you people know it. It's called ADX, Average Directional Movement Index. So how it works is this. I want to load it on my screen first of all. Just a second. How do I confirm that this trend is upwards, therefore I'm supposed to buy this at this point? That's what we want to look at. How do we confirm that the trend is upwards? So to confirm is simple. There's an indicator that helps you actually confirm that the trend is upwards, or it shows you that there's a momentum to the upper side. To add it on your screen, add, this is what you need to do to add it on your screen. This is what you need to do. You need to come here, insert, then indicators, and then it's the very first one at the top. So the first thing which I'm going to do, I'm going to add these lines one by one. I'm going to remove them first of all, then I'm going to add them individually. ADX has 3 lines. This white will appears on a separate window, but the main reason there's no line being drawn here is because I actually deleted all of them. I'm going to delete this. I've deleted everything. Just a second. Should be none. So this way it should appear. It has 3 lines. There's the first one, which is the main one, and that shows that there's a momentum to a particular direction. We have that. We'll right click and then indicators list. Then we come here, then we add the first one, which shows that there's momentum. Anytime you have this green line above 25, and we need to add that 25, anytime you have that green line above 25, it means there's momentum to a particular direction, but it does not show which direction. Like in this case, this is the 25 line. We have this. So far it was above 25, it was above 25, but it does not show which one is upward. Like it only shows that there's momentum to a particular direction, but not exactly which direction. So to know direction, you have to add the remaining 2. Yeah, and then D plus means this is the second handle. It means green, should be green, and it means that that trend which is dominating is upward. So if you have green, that's upwards. If you have main one above 25 is momentum. Then the last one is red. I'll make this bold so we are able to see it good. So this is what you'll have on your screens. This is how, if you add ADX on your screen, this is what you'll have normally. And as you can see from this point here, look at it from this point. Already it crossed, which means there was a sign that we are heading upwards. So as long as you have the green one, this one should be blue so that it appears big for us to see. Let's put it navy, dark blue. It should also be bold. Yes, correct. So anytime you notice this cross, that the green line has actually gone above the red one, then that means that the current dominant trend is upwards. And if you also notice that this one here is above 25 and this is true, there's a cross, then that means that we have a momentum to the upper side. So like from this point here, when it crossed, the green one crossed above the red one and the complete one was above 25. From this point onwards, somebody ought to have known that we are currently heading upwards. Therefore, whatever you choose to do here should be upwards and only upwards. So there's also this one here. This is another way. You also have at this point, you see that price, the red one actually crossed below the green one, and then the complete line crossed above 25 subsequently. So what this meant was that we are still heading upwards. You ought to have sold the entire place. This was a sell. As long as the red one remains above green one and the complete line, which is the main one, remains above 25, we are heading downwards. So this is one way you can know trends. Immediately you identify such changes. Like if you see that price has gone, in this case we have the red one has gone above the green one, that's the beginning of a downtrend. And if the green one has gone above the red one, that's the beginning of an uptrend. You're supposed to buy instantly. So that also depends on your strategy. Somebody may not necessarily buy it instantly, but it confirms for you that we are still heading upwards. Therefore, you're supposed to look for trades in that direction. So just a second. Anytime you have this, assuming you have your levels, like this. You have this like the one we have here. This is a very good level. And then so far in the past, you can see that there was no clear direction. Like this, the green ones keep switching places with the red one. There was no clear direction. It kept switching places, switching places, switching places, switching places. It kept doing the same thing. Then somehow it crosses above, and then the next candle actually also crosses above while we are green. That's a sign that the place where we are consolidating has actually ended. That consolidation is ending. You're supposed to wait for a retracement, then you pick a buy. So this one helps you gauge the momentum. Once this is true that the main line is above 25, the main one is this one. Once it is true that it's above 25, that's a confirmation that we have a momentum to that direction. So you're supposed to look for a buy and only buying. The same way, when you have the momentum one above 25 and then the red one is above the green one, that is downwards. Look for a sell. Look for a sell immediately. Don't find yourself buying anything or selling anything if there's no momentum to that direction. So I managed to change this into histogram, like to create a new version of the same indicator, but it's histogram. You go to insert, and if you want, this indicator is going to be on the description, or if you need it, if you don't find it there, you can just leave a message under the chat button. This is the same piece of information. This indicator that you're seeing here at the top is the same indicator which is now below. This is the same one and the same indicator. So what it does is this. I realized that if I place it in form of a histogram, it actually makes sense for me a lot. What this means is this, that from this point here, anytime you see a blue line, this is the blue, this blue columns, anytime you find the blue column is above some level, this one also should add 25. So anytime you realize that the blue line is above 25, and while it's above 25, the next color you're seeing is actually red, then that means the trend is downwards. So you can basically see the same thing. It's just the exact same thing which you are seeing here. Is the same thing which has been plotted as an histogram. It's the exact same thing. Just that this one gives us a visual impression. Somebody may not look at this, may not understand whatever is happening here, but this one gives you another view of the same thing. This is important. So anytime you have like the blue line is above 25, that's the most important thing. You check the next line. Is the next line, is the next color you're seeing on that screen, is it green? If it is green, then the current dominant trend is upwards. And if it is red, it means that the current dominant momentum is to the lower side. So you're supposed to look for a sell and only a sell. So let us look at that. We want to check it properly to see just in case there's anything. Just a second. We have this one. We have this one. So there are some cases where you can find that the red one is above everything. Such a case, it means that there's no momentum towards any particular direction. Like from this point here, from this point, there was no clear direction. From this point here up to the time when it broke above, there was no clear direction. We had no direction at all. From this point to this point, there was no clear direction. So what that means is that even if you're using this one to enter trades, you could have known that we are consolidating. And the person who was using price action purely also ought to have seen that there's a range where price keeps going, either tries to break above, comes back down, sustained, continues up, down, continues up, then down. So if you know something like this, you don't trade anything. Wait for this to cross clearly and also that place to be broken on the main chart. Then you can enter trade in that direction. So this is the same information which is this one here is the same one which is here. This is the same thing. Don't think that this is now a unique one. No, it's not unique, it's the exact same thing which was just plotted in form of an histogram. So I can still draw it. It has 3 lines. The blue one is the main one. I'll make this to be none so that you're not able to see them. You see only the main one. Like that, we have that. So this is how the main line looks. This is how it looks. So anytime you notice that there's a sell signal, but then this one is above 25, that's a trade. But if there's a clear buy on the main chart, but there is no momentum, what I mean by no momentum is these lines are below 25, you leave it. So we'll put that to be bold, so that we are able to see them clearly. And now we have our chart like that. The same thing will load a new chart, SP500. We have SP500 is here, SP500. So somebody may not understand this is just coding. It's a very minor code. It's like we are just trying to translate what is written from one indicator to another so that we're able to see visually whatever is happening. We have this. You can see in this case the green line is above the red one. That means there's a trend to the upper side. It does not confirm that we are continuing. It means there's a trend to the upper side. What confirms momentum is actually the complete line. So I believe today we've looked at something different from what we normally look at. So far we've not been mentioning anything to do with indicators, and personally I normally don't like using indicators. It's better for somebody to understand what the chart is saying first of all before they look at an indicator. But I've realized that this indicator is a bit better. It's really good. It's a custom. You'll not be able to find it anywhere unless somebody just makes it for themselves. So you can also see SP500 weekly. Just look at this from this point. From the moment when price broke above here, we've been upwards all the way up to this level. And it is true that the green one has remained on top of the red one. All this time you're supposed to be looking for a buy. All this time there was a buy, there's a buy, there's a buy, there's a buy. So don't find yourself selling when this indicator is showing you a buy. The idea is to wait anytime it crosses above and then the complete line is actively above 25, then you continue in that direction. So thank you very much. I believe that should bring us to the end of today's webinar. If you have any questions, just anything, you can write them down under the comment. We have just below my video, you'll find a space where you'll be able to write your questions. Anything to do with that indicator, it's available. It's basically it's available for all M24. If you're using FreshForex, then it is here. It is under insert, then indicators, and then trend indicators. We have ADX, average directional movement index. So thank you very much. That should bring us to the end of today's webinar. See you again tomorrow at 7:30 GMT.